going on, guys? Fisker has a big problem. The automotive industry has witnessed many ebbs and flows, and one of the most intriguing narratives in recent years is the story of Fisker, a California-based electric vehicle company founded by Henrik Fisker, aimed to disrupt the traditional automotive landscape with innovative designs and sustainable technologies. Despite its ambitious goals, Fisker faced significant challenges, culminating in its 2024 bankruptcy. In this video, we're going to explore the historical context of Fisker, the factors contributing to its financial downfall, and the implications for the broader EV industry. We'll look at things like the technological, financial, and strategic missteps that led to Fisker's failure, alongside a closer look at the external factors that contribute to its total collapse. Fisker was founded in 2007 by Henrik Fisker, a renowned automotive designer known for his work on the BMW Z8 and Aston Martin DB9. The company sought to combine high-performance luxury vehicles with sustainable, eco-friendly technologies, particularly focusing on hybrid and electric powertrains. Fisker's first major project, the Fisker Karma, was a luxurious plug-in hybrid vehicle launched in 2011. Karma boasted a sleek design, solar panels on the roof, and cutting-edge technology, positioning it as a serious contender of the nascent EV market. However, the Karma's early success was short-lived. Although it generated significant buzz and attracted high-profile customers, including celebrities, it was plagued by technical issues. Early models suffered from frequent recalls, battery fires, and a lack of reliability. Fisker had partnered with A123 Systems, a battery supplier that soon after declared bankruptcy, exacerbating the company's production problems. By 2013, Fisker had accumulated hundreds of millions of dollars in debt, and despite securing significant government loans, the company filed for bankruptcy. The assets of Fisker Automotive were acquired by Wanzhang Group, a Chinese automotive parts company, in 2014. I totally said that company wrong. Anyways, despite that, Henrik Fisker remained determined to revive his vision. And in 2016, he founded Fisker Inc., a company which aimed to pivot from the hybrid vehicles to fully electric cars. This was a strategic move that aligned with the broader shift in automotive industries towards EVs. The flagship model was the Fisker Ocean, an all-electric SUV designed to compete with other electric SUVs, such as the Tesla Model X. The Ocean was lauded for its sleek design and affordability. It started at $37,499, and it's promised to be one of the most world sustainable vehicle. Fisker's use of recycled materials and solar panels in this car further cemented its green credentials. At the beginning of the 2020s, Fisker seemed poised for success. The company went public in October of 2020 through a special purpose acquisition company, or otherwise known as a SPAC merger.
Two things you're going to do different than every other automaker, including Tesla.
Yeah, we have about 20 million vehicle overcapacity today in the automotive world. It's totally inefficient. There's no reason specifically for a startup to actually build a new manufacturing plant. We're going to outsource manufacturing. Secondly, the pillar of traditional hardware being the number one, we spend too much money, too much time. We have come up with a business model where we can bring vehicles to market in 29 months by sharing hardware with other OEMs, and we are well in plans to do that and finalizing them. Those are two important inefficiencies where today and in the future we'll have to spend a lot more money on software, a lot more money on the consumer itself, the digital experience. And that's where we are putting over our money.
It raised over $1 billion in capital. This provided Fisker with the financial resources to advance the production of the Ocean and fund the research into new models, including the Fisker Pair, a smaller electric vehicle aimed at urban drive. Fisker's stock price surged as investors were eager to back new EV players after seeing what Tesla did. The EV market was growing rapidly, fueled by government incentives, raising environmental awareness, and breakthroughs in battery technology. The company also forged strategic partnerships, including a deal with Magna International to manufacture the Ocean SUV and a collaboration with Foxconn to develop the Pair. Despite these early successes, Fisker faced significant hurdles in scaling production. One of the company's core problems was its reliance on third-party manufacturers. Unlike Tesla, which vertically integrated much of its production and supply chain, Fisker outsourced production to Magna and Foxconn. While this strategy reduced capital expenditures, it also made Fisker vulnerable to supply chain disruptions, production delays, and quality control issues. By 2020, the global automotive industry was struggling with semiconductor shortages, rising material costs, and supply chain bottlenecks, challenges that hit smaller companies like Fisker particularly hard. Although Fisker managed to deliver the first Ocean vehicles in 2023, production numbers fell short of expectations. The company had initially projected 42,000 units for the first year, but only delivered a fraction of that. Another major issue was the increasingly competitive EV landscape. By 2024, nearly every major automaker had launched or was in the process of launching electric models. Tesla, Rivian, Lucid, and established players like Ford, General Motors, and Volkswagen were all ramping up their electric vehicle offerings. Competition intensified, Fisker struggled to differentiate itself. And while the Ocean's design and features were appealing, its performance and technological capabilities lagged behind rivals like Tesla, which continued to dominate the market in innovations such as autonomous driving, battery range, and charging infrastructure. Fisker's pricing strategy also faced challenges. While the Ocean was marketed as an affordable luxury vehicle, the company was forced to raise prices due to rising material costs. This price increase alienated some potential buyers who were initially drawn to Ocean's affordability. Meanwhile, companies like Tesla and Ford began slashing prices for the EVs, further putting down pressure on Fisker to compete on price. By mid-2020, it became clear that Fisker's financial situation was precarious. The company had burned through much of the capital it raised during its SPAC merger, and its production delays meant that it wasn't generating enough revenue to sustain its operation. Fisker's losses continued to mount, and the stock price plummeted as investors' confidence waned. The company's financial statements revealed growing debt and diminishing cash reserves. Fisker had taken on significant loans to finance its production ramp-up, and with interest rates rising globally, the cost of servicing this debt became increasingly burdensome. Analysts began to question Fisker's ability to scale production profitably and meet its ambitious growth targets. In September of 2024, Fisker officially filed for Chapter 11 bankruptcy protection. The company cited insurmountable production challenges, rising costs, and an inability to raise additional capital as their primary reasons for their financial collapse. Fisker CEO Henrik Fisker released a statement expressing his disappointment, but maintained the company's vision for sustainable transportation was still valid despite the setbacks. Now, Chapter 11 bankruptcy allows the company to restructure its debts and potentially continue operations, but Fisker's future remains uncertain. These bankruptcy proceedings revealed that the company accumulated over $2 billion in liabilities, including unpaid loans, supplier obligations, and customer deposits for pre-ordered vehicles, all of which may personally have to be paid by the company. Several factors contributed to this bankruptcy, which can be categorized into external market conditions, internal strategic missteps, and technological challenges. The first being, Fisker's reliance on third-party manufacturers exposed the company to significant supply chain disruptions. Global shortages of semiconductors and raw materials coupled with production delays at Magna and Foxconn crippled Fisker's ability to meet production targets and generate revenue. And unlike vertically integrated companies like Tesla, Fisker's business model depended on these external manufacturing processes. While this approach reduced upfront costs, it also limited Fisker's control over production and timelines. The company's inability to ramp up production in 2023 and 2024 significantly impacted its financial viability. Inflation, increased material costs, and rising interest rates also added to Fisker's financial woes. The company was forced to raise prices for its vehicles, making them less competitive in a market where rivals were already slashing prices to attract consumers. Fisker faced intense competition from both established automakers and new EV startups. Tesla, in particular, continued to lead the market with superior battery technology, performance, and a robust charging infrastructure. Fisker's vehicles, while innovative in terms of design and sustainability, couldn't compete with Tesla's technological advances. And Fisker's financial struggles eroded investor confidence, leading to a sharp decline in stock price. The company's inability to secure additional funding through equity or debt left it without the capital needed to sustain operations and invest in future growth. And while Fisker's vehicles were praised for their design, they lagged behind in terms of technological innovation. Fisker was slow to adopt advanced autonomous driving features, battery efficiency improvements, and the new updated charging infrastructure investments that were becoming standard in the industry. And while Fisker faced internal challenges, it's also important to recognize that there were broader external factors that influenced the company's struggles. The regulatory environment in the US and in Europe provided substantial support for EV adoption in the form of subsidies, tax credits, and emissions regulations. However, Fisker was unable to capitalize on this momentum due to its production delays and inability to scale at the time. The US government's Inflation Reduction Act, passed in 2022, provided incentives for EV production, particularly for vehicles manufactured domestically. But Fisker outsourced production to companies like Magna and Foxconn and missed out on these subsidies and tax credits. Tesla and GM, who manufactured their vehicles in the US, benefited from these policies, further pushing Fisker into a disadvantaged position. So what happens next? Fisker's Chapter 11 filing allows the company to reorganize its debts and potentially restructure its operations. And while this offers Fisker some more breathing room, its future remains uncertain. In a highly competitive market with limited room for error, Fisker will need to regain investor confidence and address its production bottlenecks if it hopes to survive. One possibility is that Fisker's assets and its technology could be acquired by a larger automaker looking to bolster its EV portfolio. Given Fisker's design expertise and its sustainability focus, companies seeking to enhance their green credentials might see value in acquiring Fisker's brand and technology. Fisker also might pursue new partnerships or mergers to strengthen its operational capabilities and reduce financial pressures. For instance, a partnership with a more established automaker could provide Fisker with the production capacity and supply chain reliability it desperately needs. And finally, if Fisker fails to secure additional funding or find a partner, liquidation remains a possible, a bit undesirable outcome. In this scenario, the company's assets would be sold off and shareholders would likely lose their investments. All in all, what I'm saying here is that the bankruptcy of Fisker probably could have been prevented. While Fisker had compelling vision and innovative designs, the company was unable to navigate the complex and competitive landscape of the modern automotive world. It had too much reliance on external manufacturing, coupled with supply chain disruptions, rising costs, and intense competition, which ultimately led to its downfall. As for Fisker, I don't think anybody knows what's going to happen. While the company is seeking to restructure under Chapter 11, it's going to face significant challenges in regaining investor confidence and reestablishing itself in a market dominated by larger, better companies. One thing is for sure is that multiple lessons can be learned from Fisker's rise and fall, and it's undoubtedly going to shape the strategies of other EV companies as they navigate the path to success. Let me know what you think about Fisker and anything that they could have done to help themselves not file for bankruptcy. If you like these videos, please leave a like down below and subscribe, and I'll see you guys in the next one.